Buenos dias, good morning, and welcome to the East Valley Hispanic Chamber Business Symposium. I am Frankie Chorrillos, President of the Chamber, and it is my pleasure to serve you as Mistress of Ceremonies. Please take your seats so we can enjoy el pan dulce y un platillo mexicano provided by the Mesa Convention Center. So during this time, I would like to invite Pastor Anaya to give the invocation. Pastor?
Good morning, everyone. God bless everyone. Thanks God for being together and with no difference of languages and races and stuff, knowing that it's the main purpose to be together is to improve a lot of things that we know that we need in financial and also in the community needs. So I'm going to ask you just to please stand up just a couple of seconds so we can pray together. Gracias a Dios porque estamos juntos sin ver barreras de idiomas ni nada por el respecto, sino para recibir apoyo y ayuda en información de asunto financiero, así como también de organización no lucrativa. Así que vamos a orar. Father, thank you for this time and this morning, this beautiful morning. Thank you for your blessings, and we know that you're going to bless the hands to prepare this food. It's going to be beneficial for our health. Padre, gracias por este momento, por estos alimentos que nos das, y sabemos que van a ser de beneficio para nuestro cuerpo. In the name of Jesus, we thank you. Amen. En el nombre de Jesús, gracias. Amén. Amén.
Now, please help me welcome Mayor John Giles up to the podium for a few words.
Thank you very much. It's an honor to be here to welcome you to Mesa and to this great event. I am excited about this event. When Phil Austin and the East Valley Hispanic Chamber first presented this idea to the city, I remember being really enthused because the topic that we're discussing today is critically important. So we're welcome, Ms. Cousins, thank you. We're anxious to hear your message. I personally have had the experience of being a small business owner for the last few decades in Mesa, and I know the pain that is involved in that, the challenges of that, of finding capital, and you're using personal lines of credit and credit card and loans from friends and family and doing everything you can to get a business up and running. And the idea of working with the federal government and getting through a stack of paperwork to even submit some sort of an application is very intimidating. So I want to say thank you to the Hispanic Chamber for taking this cause on, to educating the small business community as to what the options are. Thank you to the many banks that are here. Your commitment to community reinvestment is critical, and it's very beneficial. So a lot of great work is being done in our community as a result of banks and their commitment to community reinvestment. So thank you very much. So again, on behalf of the community, thank you for being here. Thank you to the Hispanic Chamber for taking the lead. Thank you to Ms. Cousins for coming. We're excited to hear your message, and we look forward to partnering with the Hispanic Chamber on many more events like this in the future. Thank you very much.
Thank you, Mayor John Giles, for that warm welcome. Today, the Board of Directors of the East Valley Hispanic Chamber of Commerce would like to thank our partners for helping us coordinate this event. We could not have it done without the following companies: SRP, Necodex, Primero Negocios, and the City of Mesa for the continued support of our chamber, as well as serving as our premier sponsors for this event. We would also like to thank our copper sponsors, National Bank of Arizona, Wells Fargo, and Alliance Bank. Thanks. Also joining us this morning, obviously, Mayor John Giles, but we also have here Councilmember Jen Duff, Councilmember Francisco Heredia, Councilmember David Luna, Mesa Police Chief Ramon Batista, Mesa Fire Chief Mary Kamali, City Manager Chris Brady, and our EVHCC board members Angela Solorio and Carlos Velasco. Our guest speaker this morning is Ms. Joselyn Cousins. Joselyn manages the Community Development Field Group at the Federal Reserve Bank of San Francisco, which partners with financial institutions, community-based organizations, and government agencies to address pressing community development needs impacting low-income neighborhoods and households. Joselyn also serves as a regional manager for Arizona and Nevada, where she provides technical assistance and training on successful initiatives and programs addressing affordable housing, healthy community asset building, small business development, and access to financial services. Joselyn has an extensive background in community development in the private and public sectors. Prior to joining the San Francisco Feds, Joselyn was the Vice President of Community Development of the United Way of Southern Nevada, where she directed and managed the community impact team in developing strategies to address local issues in the areas of education, financial stability, and health. She has many years of banking experience working as a community reinvestment officer for both small and large financial institutions in Nevada. Joselyn earned her bachelor's degree in administration from California State University, San Bernardino. Please help me welcome Joselyn Cousins.
Good morning, everyone. So as Frankie said, I'm Joselyn Cousins with the Federal Reserve Bank of San Francisco, and I want to thank Phil Austin and Frankie Joe for inviting me here today. And I'm just really pleased to share some information with you regarding our Small Business Credit Survey. As business professionals, I hope that you'll find the information informative and useful, and the lenders out in the audience, this will provide you some context in terms of opportunities for you to address the credit needs of the small business community. So I just want to say I always preface my talk with, I'm not an economist, so please don't ask me anything about rates. So, because your guess is as good as mine. So that I leave that to all the super smart people in San Francisco. So let's go ahead and get started. So the Small Business Credit Survey is a national collaboration of the 12 reserve banks of the Federal Reserve System. And the survey provides intelligence on small business financial needs, decisions, and outcomes to policymakers, lenders, and service providers. The report focuses on small businesses with employees of 1 to 499. And they can either be full or part-time employees. And I believe most of the businesses here in the audience fit that profile. And so again, I hope you find the information relevant and useful to you. So the survey started during the financial crisis, and there's two reasons. So the survey is designed to give policymakers and lenders a better understanding of the needs of small businesses to inform incentives, protections, and lending product development. And it also provides small businesses like some of you here today and technical assistance providers with information to make informed decisions about credit strategies. Oh, there we go. So this slide provides a demographic snapshot of the businesses that participated in the survey. And you can see Arizona falls into the mountain region, which we had 88% of the respondents fell into the mountain region. One thing I do want to say is that in prior years, 2 years ago, Arizona was well represented in the survey. And so when we receive 50 or more responses from a particular state, we're able to give a specialized report for just that state. So this year we didn't have enough responses for Arizona, but I'm hoping that I can partner with the Chamber and Frankie next year so that we can increase the number of responses from Arizona so that we can have a customized report and better reflect the needs of the small businesses here in Arizona. So the survey was fielded in the third and fourth quarters of 2018, and it yielded 6,600 responses from employers from across the country, 50 states and the District of Columbia. So some of the demographic highlights include 53% of the firms are 10 years or less of age, 71% of the firms have revenues of $1 million and less, and 55% of the firms have 1 to 4 employees, which shows that most respondents are very small businesses. And 18% of the respondents are minority-owned businesses. And again, I hope that I can increase that number by working with the Chamber. I think one of the important things that we need to start with is performance. So what do those small businesses around the country, how do they feel about their performance? This slide shows that a larger share of firms reported revenue growth and employment growth in 2018 compared to 2017, and 72% of firms expressed optimism for revenue growth in 2019. So, I mean, that's a good sign. So we want to see that small businesses are optimistic and they are expecting, continued growth. So also, more than 1/3 of firms reported adding payroll employees in the prior 12 months, which is again an indication of growth. The firms driving employment growth include startups, firms with 5 or more employees, firms with more than $1 million in annual revenues, and firms with decision makers younger than 46 years of age. So again, I mentioned earlier that their businesses are expecting some growth. So the last slide showed that more than 1/3 of firms reported adding payroll employees in the prior 12 months. But now, when we projected forward, the businesses, the future revenue employment growth kind of leveled off for 2018. This says that businesses don't think they'll grow like they did in prior years, as much as they did in 17 and 18. And I kind of wonder what changed those expectations, and hope that I can have some discussions with some of you later on to figure that out. 31% of firms are growing, which means that they increased revenues, employees, and plan to increase or maintain number of employees. The important point to note here is that 80% want their businesses to grow. We need to figure out how to make that happen. Is it access to capital? I would imagine so. Or is it improving credit scores? You'll see in a later slide that there's the difference between access to credit for low credit risk businesses versus medium and high credit risk. This is where the lenders and technical assistance providers can provide assistance to the small businesses here in the community. So how are businesses funding operations? Mayor Giles mentioned that many businesses are using their own personal funds, they're using credit cards, etc. So what we found is that retained earnings remains the most important funding source, while loans and lines of credit are most popular when businesses seek external financing. The amount of outstanding debt is very relevant from a lender's perspective. So, you go to a lender or to a bank and you're looking for additional credit, they want to know how much outstanding debt you currently have. So based on the survey, 70% of firms have outstanding debt, and most firms carry less than $100,000 in outstanding debt. Year-over-year results showed consistent demand for new financing, with 43% of firms applying for new capital in 2018, which is very similar to 2017. The majority of firms are seeking to expand their business or pursue a new opportunity, which has the potential to provide more jobs for Arizona residents. Here we see that 57% of firms sought financing for less than $100,000, while 20% sought loans at less than $25,000. This begs the question, what type of lenders offers loans at less than $25,000? Is it banks or community development financial institutions or online lenders? And we'll talk a little bit more about that. And I believe our next panel, will answer these questions as well in terms of what type of lending or loans are available. So are businesses receiving the financing they sought? Well, nearly half of applicants, 47%, received the full amount that they applied for, similar to the 2017 survey. Of those that did not apply, roughly half reported they had sufficient financing. So if we look at who received funding, we also need to look at where the financing shortfalls were. So 54% of firms that applied for $250,000 or less did not receive the full amount. And financing shortfalls were particularly pronounced among firms with weak credit profiles, not surprising, unprofitable firms, younger firms, and firms in urban areas. And that surprised me. The urban area piece surprised me, because you would think that you'd see less approval in the rural markets. So that was pretty surprising for me. So the most popular type of financing is loans and lines of credit, as 85% applied for this type of financing product. So again, I think this is an opportunity for the banks, and of which we have many in the room today. The previous slide indicated that 85% of firms applied for a loan or a line of credit. So what type of lender are these businesses applying to? Applications to online lenders continued their upward growth trend in 2018. You know, and that again was interesting. The 2017 and even the 2016 survey showed an increase in applications to online lenders. You know, and again, we hear good and bad about that. So, and we'll hear a little bit more in terms of why. Despite this growth in online lender applications, borrower satisfaction with online lenders remains lower than satisfaction levels with large and small banks. Medium and high-risk credit applicants seeking financing were as likely to apply to an online lender as a large bank, and more likely to apply to an online lender than a small bank or a CDFI or credit union. Again, we hear good and bad things about online lenders, but it appears businesses use them. And in my opinion, not the opinion of the Federal Reserve Bank, in my opinion, we need to change that. For those of you that in the room that are not familiar with CDFIs, or Community Development Financial Institutions, of which you'll hear from the panelists today, they provide credit and financial services to people and communities and businesses underserved by mainstream banks and lenders. CDFIs encompass a range of nonprofit and for-profit entities, including community development banks, community development credit unions, loan funds, venture capital funds, and microenterprise loan funds. So one of the things in terms of CDFIs, when some require that you go to a bank first, and if you're declined for a bank, this is an alternative lender that you can go to. And so one of the important things, and I know we talk a little bit about, the mayor mentioned Community Reinvestment Act. This is an opportunity and a vehicle that banks, if they can't provide direct lending to a small business, they do invest in community development financial institutions and provide them the capital to provide capital to the small businesses that they aren't able to lend to. I think it's always interesting to know why a business chooses one lender over another. Based on the survey, applicants chose a lender more often based on relationships and chance of being funded than cost. This is contrary to the way I think, as I always look at costs. So, but again, relationships are important, and I think the symposium today speaks to that, because it's giving us an opportunity to do networking this afternoon, to talk to lenders and just really see what's available out there. So I have to note too, at the bottom chart, I live in Las Vegas. I do work remotely for the Fed. So I live in Las Vegas, and I added a picture of dice to represent the chance of being funded, because we all know gaming is a game of chance, right? And I don't gamble. I try and stay away. So though I always say those big, beautiful buildings didn't get built because they're giving all of us money when we go out and gamble. We can skip those. So we asked firms that were approved for credit who they were most dissatisfied with. Applicants that went to banks were most dissatisfied with wait times for credit decisions, and online lender applicants were most dissatisfied with high interest rates. This information that banks needs to know so that they can review and make changes to their policies and procedures to assist more businesses. And, you know, when we go to a bank or when a small business goes to a bank, you know, you need the money now. You don't need the money in 6 months, right? So I know that that's a challenge and a hurdle that small businesses need to overcome, or the banks need to overcome in order to assist the small businesses. So again, another opportunity for banks. So we talked about challenges, so let's talk about some satisfaction in terms of the applicants. So applicants were most satisfied with small banks. And that may be because, and not bank bashing at all with the bigger banks because you all are here, and maybe the small banks, that whole notion of relationships are really important. So maybe people feel that they have better relationships with smaller banks. Just throwing that out there. But again, large banks are here and ready to do that networking. So large bank satisfaction has increased from 2017, but they still have a little ways to go to catch up with small banks. So 57% of firms did not apply for financing, as almost half stated they had sufficient financing. I wonder if that's true for you in the audience. Are you all well-funded? Don't need any additional loans? That was again another interesting bit of information from the survey. So the data captured by this survey underscores areas of opportunities for both borrowers and lenders. One example is the importance of expanding access to capital for small businesses, which we know is first and foremost, and so that we can see them grow and add to the economy. You know, our dual mandate at the Federal Reserve System is stable pricing and full employment. And small businesses play a huge role in the full employment piece. So we know around the country that small businesses are large employers collectively across the country and for our communities. So they play a very important part. Another example is the prevalence of various types of financial institutions, including CDFIs, as well as alternative lenders such as online lenders. And that's very important for providing access to capital. I would love to see a shift next year in terms of the resources, or excuse me, the survey responses away from online lenders, more towards banks, small and large, as well as community development financial institutions. So I know our next panel will discuss some of the resources available to help small businesses grow and access credit. So thank you very much, and I think I have a few minutes for questions if there are any. Again, don't ask me any hard questions about rates or anything. Yes, sir, in the back. Well, you know, honestly, and from what I've seen in the last few years with the survey, you know, I mean, they're easily accessible. I mean, that's one of the things. You go online, you don't have to go into a bank, which can be intimidating for some small businesses. So it's easy to access them. You go to your computer, you apply, and there you go. And also, as we've noted here, it's the speed. You know, they get it to you quickly, but there is a price for easy access and fast processing time, and that's very high interest rates. You know, and then there's been some studies that even stated that some of the online lenders are predatory lenders. You know, and so, but when a small business is desperate, when anybody's desperate, a consumer as well, for financing to continue to grow their business, pay for operating, you know, operations, you're gonna go where you can get the funding the fastest, and that's really why, what I see from the past surveys in this one, why folks are focusing on online lenders. But we need to change that. Yeah, it's not on. Well, you know what, that's a good question. I don't know. I mean, I think, I believe he said our online lenders, they're charging higher interest rates, and is that why they're able to provide more loans, and is it due to their IT, that they have their systems, their IT systems are better than financial institutions? Is that close? Okay. Yeah. Well, as I said, that's a good question. I don't know I think banks have, I worked at banks. I do believe that banks have good online IT platforms. I just think that it's word of mouth, and I think that online lenders, and then they probably market their products better. I mean, they're sending it out, sending information out, and again, I think many small businesses don't want to go into the banks, and so you don't. This way, you just sit in front of your computer. So, and they know that folks need the money, and that's why I think they're charging higher interest rates, because they can. There was another one here. Yes.
Morning, my name is Greg. I saw your kind of demographic breakdown at the very beginning of the presentation in regards to minority and non-minority business. Do you have any information related to gender or women-owned businesses?
You know what? Yes, we do. So, but I don't have it in front of me. But if you go to, on the last slide, let's see if I can, can we go back? Oops. And as if you can read that, right? But I have cards. So if you go to that website, there are reports on women-owned businesses, rural markets. There's even a report, but it's a little dated, and that's why I didn't share information from it, on minority-owned businesses. So there are different segments and sectors that are broken down, and it's available on that website. It's a very, very robust website. I mean, you can see the various data points. I mean, I only highlighted a very small amount of information that's available, but you can go on there, you can download the data. I mean, not that you're data geeks, but if you are, you can, but it's available there. And also, I will be available later on to answer any additional questions, and I'll give you my cards, and I'm happy to share the links with you with whatever reports you feel you'd like to see and are relevant to the group. And I can actually provide that to Frankie, and then you can maybe send it out? Okay? Is that, okay, all right. Oh, one more? Do we have time? Yes?
Where does crypto coin fit in small business?
Oh, boy. I knew somebody was going to ask me that. That's a good question, but I can get an answer for you because I don't have one. So, but we are looking at that, and the economists have, done a little research on that, but I can give, and I will answer that and give that to Frankie Joe. Yes, Phil.
What effect, if any, does a more robust economy you're experiencing now have on availability of credit, and how is that affected by potential downturns?
Well, and again, this is my comments, not from the Fed. I think the economy is always going to impact, the success of and access of capital. So, I mean, we started this survey during the financial crisis for a reason, because people businesses or access to credit wasn't readily available. So we wanted to get a better sense of, during a downturn, what happens? Why are businesses, doing what they're doing, and what challenges and barriers to growth and success are they experiencing? And so the economy absolutely does impact. We've been on a really positive, trend, but again, who knows what next year is going to look like? So, not a warning, but just we never know. So, any other questions? Yes, sir. You all ask really good, tough, hard questions. You know, I mean, it's true. I mean, and I know, and I mentioned in my comments about medium and high-risk businesses and the challenges that they have in terms of, you know, credit risk. That's a challenge. And again, I mentioned community development financial institutions because that's the vehicle. And I will tell you from this survey, I think it was 3%, and it has stayed very steady at 3% over the last couple of years, that businesses are not accessing credit through community development financial institutions, and that's the vehicle to do just what you're saying. When a business is medium or high risk, this provides them, technical assistance comes along with the ability, you know, access to credit, but it helps them improve, you know, elevate their credit profile as well as access the capital that they need to grow, because it's very important. I mean, and you know, as much as we want banks to do every loan, I mean, I'm not on the compliance side, but safety and soundness is an issue. I mean, I am a bank regulator, and the bank regulators are looking at the types of loans that banks do. And if they're not doing them through safe and sound policies and practices, then they're going to hear from us. So, but to that point, again, that's where banks then invest in CDFIs to help them have the capital to do the work that needs to improve and elevate the small businesses so that they can become bankable. Banks are in business to do loans, and I always say that. And so if they can't help you now and they can refer you to a CDFI, they absolutely want to see you come back and become a bank customer. Oh, yes, sir.
How is the Fed going to be addressing sort of a millennial trend? Millennial businesses, specifically tech businesses, don't have traditional banking relationships, nor do they want them.
Well, I mean, some of the stats here said that the businesses that were growing, 46, or a large, I think it was, whatever, then I can look. They were 46 years of age and younger were the ones that were growing. So to your point, younger people are starting businesses. And I mean, millennials are a different breed in every regard. Sorry to you millennials out there. So, you know, that's a good question. I mean, if they're not looking at traditional credit, you know, I don't know. I mean, I can only speak to that piece of it, but that's a really good question. I don't have an answer for that one. So, yes, ma'am.
So I'm a millennial business owner.
Okay. Yeah. That's great. Yeah.
Okay, so I'm in the 30% that you put up there that hasn't had a loan on my business, and I've had my business for 7 years, and I'm for the first time thinking about growing.
Mm-hmm.
So I thought about applying for a loan or a line of credit, and so we work, you know, 10, 12-hour days, sitting in front of our computers. So the first thing that comes up to mind, I knew like 3 or 4 online lenders.
Right.
But I thought, because I'm an elder millennial, I thought, you know, maybe I should reach out to the bank that already has my account. So I reached out to them, and it took forever for them to get back to me. I submitted everything they needed. They called me back with a product I wasn't seeking. And then when I got into the product I was seeking, I felt that I had more expertise in that product than they did, because I had done my homework online. So that was kind of a turnoff. And then I reached out to my network and my community because I thought, you know, I'm a small local business owner. I would love to work with a small local bank. Where are they? So then it took me a while to get a couple of referrals, and then I got a referral from a bank in Ahwatukee, and I'm in Scottsdale. The commute alone is about 35 minutes, and I just don't have the time. And at that bank, they refer me to one specific personnel employee that does what I'm looking for. And we just weren't able to connect. It was like playing phone tag. And I don't have time. The good thing is that this isn't something that's rushed, but I can see that if a business is waiting to get that money or needs it within a certain period of time, you know, the clock's ticking. So
Right.
we gotta go. And I think that's one thing, the misconception with millennials is
No, that's good. No, and I appreciate that, and I think that answers the gentleman's, yes, question about online lenders and why people go, and I think that's true. You know, I mean, it's easily accessible, and so I absolutely agree with that.
We're not going with an online lender.
Thank you. Yeah. Thank you. So, I mean, and I guess that speaks to everything that you have said is exactly what the survey represented. Wait times for banks, is too long. So, but I'm going to say that the banks in the room are going to see you later on after the panel discussion. I think, there you go, you got one already. So I think that won't be a problem going forward. And that's what we're all here to do today, is network and make connections with lenders and technical assistance providers so that all the small businesses can grow in the community of Arizona. Thank you.
I'm going to have Joselyn stay up here for just a second, but thank you so much for that informative presentation. So at this time, we would also like to have our panel speakers come up to the stage for the next session. And also, I apologize, I neglected to announce one of our other board members that are here today, Kristen Carino from National Bank of Arizona. I'm sorry, but welcome.
Have the people for a photo op.
Can we have the photographers up here, please?
I'll stand,
Well, Frankie, Joe, you have to be in here too.
I'll be by Frankie. Terry, good to see you, that's all right. I'll stand by Frankie.
Don't fall.
Thanks for coming.
I know, right?
Middle seat, just like Southwest, man, you got it.
I want the aisle seat.
Boarding group C, buddy.
The panel discussion will be moderated by our very own Phil Austin. Phil continues to champion the issues of small business enterprises and currently serves as the chairman of the East Valley Hispanic Chamber of Commerce. Please help me welcome Phil to the podium.
Thank you, Frankie Joe, and I want to ask you to give a round of applause to Frankie Joe and our staff here for putting on this great event. And again, wasn't that great having Joselyn Cousins here, coming all the way from San Francisco area, or I guess Las Vegas, to come to this terrible weather we're having here. And for some reason, we tried to talk her into doing this event in July, but she declined. Thank you, Jocelyn, great information. My role here is twofold. But first, I had to say I was a little concerned about, I hadn't really had that much experience dealing with federal officials and the like. So I know that my good friend Mayor John Giles, that deals a lot, he was on the U.S. Conference of Mayors and goes to Washington about every other week to talk with federal officials. So I asked John before, I said, John, how do I act around this federal official? He says, Phil, don't worry about it. Just follow everything I do exactly, and you'll be all right. Only question is, John, how long am I supposed to keep this stuff in my pocket here? Is this city property or? Great. I got to also congratulate the city for being our co-host here and the support here. Great facility, great environments, and we're just pleased to be here. My first role is to be a cheerleader for the chamber. Chamber started going in our 7th year only, having we're close to 200 members. But more important, our initiatives. When we started the chamber, we had two focuses. One, to work in the East Valley, and two, to help businesses not only prosper, but to share that prosperity with the community. So we have events like this to help businesses grow so that they increase their bottom line, but also we encourage them to work with us in community-oriented events. We have our STEAM program where for the last 5, 6 years we've graduated over 100, about 120 students in a summer-long program. These are 9th graders that give them training in the STEAM and the STEM education, and then have our sponsors help give them a scholarship, telling them if these 9th graders, they stay and graduate from high school, you get a scholarship to college. It's been very successful. We have a women's entrepreneurial program helping women with entrepreneurs to help grow their businesses and enterprises. We have had, through the city, we developed a minority and female directory to help procurement agencies like cities and big companies find out and send notices of procurement opportunities to small businesses. Then we have network. Then we're going to start a program to help small businesses, an 8-week program, hopefully start in the fall, to help those businesses learn the ins and outs of starting a business, insurance, legal issues, regulations, and the like. So these are some of the ways that the Chamber, through the help of our sponsors and members, are helping the community. So we ask you to support us and work with us, and we look forward to working with you all and the members of our panel. Now, my second role is to serve as a moderator for this panel discussion. And this is a tough kind of role because I got to keep everybody in line here and keep you on the schedule here before the assistants start the cleaning up people, kick us out here. So that's my job. It's a tough job keeping the schedule. It's not unlike what happened to a minister who died, and sorry, Pastor Luis doesn't refer to you, but a minister died and went to heaven. As he got there to the pearly gates, he saw St. Peter waiting there, waiting and asking everyone what qualified for them to get into heaven. And it was a long line, so the pastor had to wait in the back of the line. And this is a pastor who had worked 40 years in the service of the Lord. So as he waiting, he saw this one gentleman come up from the back of the line and go to the front, and St. Peter waved him in. So of course, this got the minister a little bit irate, and when he got to the front of the line, he asked St. Peter, says, "Hey, St. Peter, I've been a minister for the Lord for 40 years and worked for the Lord, and I had to wait in line to get in, and this guy just comes to the front of the line, you wave him in." St. Peter says, "Oh, Joe? You're talking about Joe. Well, Joe's a bus driver, and he scared the hell out of more people in 5 minutes than you have in 40 years of being a minister." So I have to play the role of Joe here, but it's a pleasure to do this. When we thought about this symposium, we said, what would be helpful to the attendees, to small businesses and the like? And again, access to capital is tricky. We have this young lady expound on the obstacles she faced, and it's probably not dissimilar to that of other people. So we said, let's bring into a table and presenters people who can help businesses get that access to capital, so important for growth and development. So we developed this panel over several weeks, working with the people here and their companies. But instead of just having everyone present, we're going to have a little format here. We're going to go a little bit to Hollywood, and we're going to start taking one of my heroes is Steve Harvey from Family Feud, and we're going to have the financial enterprise feud here. Okay, so to the left, representing the CDFI families. First, excuse me, we have Jose Martinez, directly to my left. President of Prestamos CDFI, responsible for the strategic direction oversight of the subsidiary lending division of Chicanos por la Causa. Prestamos provides access to capital and technical support to small businesses and economic development projects in Arizona, Nevada, New Mexico, and Texas, and has deployed over $85 million in capital since its inception. Next, we have Guadalupe Gomez. Lupe is the Director of Small Business Initiatives at Raza Development Fund, the largest Latino community development financial institution in the U.S., providing lending to small business and serving nonprofit organizations in healthcare, affordable housing, education, community facilities. He has over 25 years' experience in banking and finance. Is that true? You must have started, Lupe, when you were in kindergarten.
Actually, it's a little bit longer,
Okay.
but that's as far as I can remember.
Okay. And then last, not least, of our CDFI family is Terry Bonelli. Terry Bonelli is the Executive Director of LISC Phoenix. She believes in comprehensive community development, that comprehensive community development is not possible without targeted investments. She's dedicated to ensuring residents of marginalized neighborhoods acquire assets that they desire for upward mobility, jobs, safe and stable housing, and communities designed to promote health. Introduce our CDFI family here. And in competition with them is our banking family. Let's have a hand for our banking family here. To my immediate right is John Lewis, Senior Vice President for National Bank of Arizona, who believes that small businesses are essential to the Arizona economy and is passionate about helping small businesses thrive. During his 14-year career at National Bank, he has worked with small businesses throughout the entire state and has personally witnessed the great things that entrepreneurs have accomplished. And for John Lewis. And Michael Monterrubio is the Vice President at Alliance Bank. Michael manages small business lending team dedicated to help business clients realize growth and they have offices out of Phoenix, Tucson, Flagstaff, and the East Valley. He's a valuable resource for Arizona business, real estate, professional, municipal, and nonprofit community. There's our panel, our banking panel. All right. So, you would be the judge. In a moment, we'll start the feud. Still, I have here, how come Steve, what's his name, ever has trouble with this here? I have the questions here. Okay, the first question for the CDFI family, and we're going to ask Jose Martinez to respond to this. Please describe for the audience the goals and the purposes of the Community Development Financial Institutions.
Can you hear me? Okay, great. So thanks, Phil. So a CDFI is a Community Development Financial Institution, which the three of us represent here. We are an organization that is certified by U.S. Treasury. We're a mission-oriented organization that is CDFIs across the board to make investments, to provide financial products, to provide education, to targeted at and for low-income communities and underrepresented businesses and communities. And so many of us focus in a number of different areas. At Prestamos, we focus in the area of small business, economic development projects. There's other CDFIs that focus in housing and a number of different variety of areas that you'll hear here today. But essentially, we're here to provide access to capital to the communities that need it the most. And that's what the certification is. So when and you're working with an organization that's certified as a CDFI, you know that they're going to provide you responsible, affordable product, non-predatory lending product. And so just know that it comes with that CDFI certification.
All right, thank you, Jose. Next to Lupe. What are the various services and products available through your and other CDFIs?
Well, first of all, let's look at who CDFIs are. We have banks that are CDFIs. We have credit unions that are CDFIs. We have development fund, which is our Raza Development Fund. We have venture capital, and then there's some microloan CDFIs. So depending on what your needs are, you will find that product to be serviced by a CDFI somewhere. At Raza Development Fund, we service a lot of nonprofits, have been, we're 20 years in existence. We have a national footprint. We're doing small business here in Arizona. So it depends on what you need. Do you need a line of credit? We can help. Do you need equipment lending? We can help. Do you need a smaller loan? Maybe you go to the credit union, and what we do under 50,000, we refer them to Mighty Slow Credit Union, which is our partner. You need a microloan? Préstamos that does microloans. So every CDFI has their little niche of business. We all work together to help make things happen for the small business.
All right, thank you, Lupe. Now to Terry Benelli from LISC. Talk about the size and type of loans, type of credits, and availability of capital that CDFIs offer.
Sure, Phil, and excuse me, members of the audience. So CDFIs really range from, I would say, about $500 loans up to, we recently did a loan last year that was $16 million. It had some tax